Korea Real Estate Explained. Episode 9. Interest Rates and the Property Cycle. How Bank of Korea rate decisions flow through jeonse, mortgage demand, and property prices. Most market commentary assumes a simple relationship. Low rates lead to higher property prices, high rates lead to lower prices. In Korea, this relationship is real, but heavily mediated. The transmission runs through jeonse dynamics, LTV policy, and the unique leverage structure of the market. A standard rate cut in Korea does not just reduce mortgage costs, it also reduces the carrying cost of jeonse deposits, which changes the calculus for millions of landlords simultaneously. Understanding why requires tracing the full transmission mechanism. How does a Bank of Korea rate decision actually reach your landlord? 5 steps. First, the BOK Monetary Policy Committee raises or cuts the base rate. They meet 8 times a year. Rate moves of 25 to 50 basis points are the norm. Second, mortgage rates follow within 1 to 3 months. Korean mortgage rates are tied to COFIX, the Cost of Funds Index, or CD rates. Both respond to BOK decisions within that window. Variable rate mortgages reprice immediately on the next cycle. Third, jeonse loan rates adjust. This is the critical channel in Korea. When jeonse loan rates rise from 2% to 5%, the monthly cost of funding of 400 million won deposit rises from roughly 660,000 won to 1.6 million. Tenants recalculate, is jeonse still cheaper than monthly rent? Fourth, jeonse demand shifts. If jeonse becomes expensive to fund via loan, demand for jeonse contracts falls. Landlords must lower deposits or switch to walls. Jeonse ratios decline across the market. Fifth, property prices adjust. Lower jeonse ratios remove the cheap leverage prop from landlord returns. Marginal sellers emerge. Combined with lower mortgage demand from rate-sensitive buyers, transaction volumes fall, and prices follow. 3 historical rate cycles show how this plays out in practice. The low-rate boom from 2015 to 2018. The BOK held rates at 1.25 to 1.75%. Cheap jeonse loans funded enormous deposit demand. Landlord leverage soared. Seoul prices rose 30 to 40% over this period. The foundation for the 2020 to 2021 bubble was laid in this phase. The COVID cut and the subsequent hike cycle. Emergency cuts brought the base rate to 0.5% in 2020. Seoul prices surged 50 to 70% in 18 months. Then the BOK hiked at historic speed, from 1.5% in 2021 to 3.5% by early 2023, the fastest tightening in BOK history. Jeonse loan costs tripled. Prices peaked and corrected, and normalisation from 2023 to the present. The BOK cut modestly from 3.5% to around 2.5%. Mortgage rates fell. Transaction volumes began recovering. Seoul prices stabilised and started rising again, while regional markets remain under significant pressure. This chart puts the relationship directly in front of you. The gold line is the KB Seoul Apartment Price Index, rebased to 2015 equals 100. The red line is the BOK base rate. Read it left to right. From 2015 to 2018, the BOK cut rates from 2% to 1.25. The gold line starts climbing, slowly at first, then with momentum. In 2020, rates hit 0.5%, emergency lows. Seoul prices responded within months. By mid-2022, the index had nearly doubled from its 2015 base. Then the BOK hiked fast, 3.5% by early 2023, the fastest tightening in BOK history. Prices peaked, then corrected. But notice what happened next. Even before the BOK began cutting again, prices in Seoul had already started recovering. That lag, between the rate signal and the price response, is exactly what makes this market difficult to time. The transmission is real, but it is never immediate. Rate sensitivity in Korea varies enormously depending on how you hold property. Jeonse tenants who fund their deposit via loan are the most immediately rate-sensitive group in the market. When rates rise, their monthly loan cost jumps directly and in full. A 400 million won jeonse loan at 2% costs approximately 660,000 won per month. At 5%, the same loan costs 1.67 million. That gap is the difference between jeonse and walls being viable or not. Variable rate mortgage holders, roughly 40% of Korean mortgages, feel hikes immediately at the next repayment cycle. In 2022 to 2023, many variable rate borrowers saw monthly payments jump 3 to 600,000 won. Fixed-rate mortgage holders are insulated during their term, typically 5 to 10 years. But at renewal, they face market rates in full. Korean fixed-rate penetration has grown post-2022 as borrowers sought certainty after the hike cycle. The key implication: when the BOK moves rates, the market does not respond uniformly. Different buyer types are hit at different speeds and different magnitudes. Analyzing the market as a single rate-sensitive unit misses most of the story. 3 things to take away from this episode. 1. Watch jeonse loan rates, not just mortgage rates. For Korean property, the jeonse loan rate is often more important than the headline mortgage rate. It determines the cost of the system's primary leverage vehicle. Track it as a leading indicator for jeonse demand, transaction volumes, and price direction. 2. Rate cycles in Korea are amplified by LTV policy. When the government loosens loan-to-value limits at the same time the BOK cuts rates, the effect on prices is multiplicative, not additive. The 2020 boom was caused by both levers pulled simultaneously. Understanding which lever is being pulled and how far is the key to reading each cycle. 3. Rate sensitivity varies enormously by buyer type. A jeonse tenant with a jeonse loan and a fixed-rate mortgage holder have almost opposite rate exposures. Market-level analysis averages these out. But for individual positions, the distinction is critical. Korea Real Estate Explained. Episode 9, complete. Next episode, the demographic time bomb. What Korea's 0.72 fertility rate means for long-term property demand. Subscribe at KRE Official and we'll see you there.